39,369 is where we are at in Bitcoin. And there was a glimmer of hope earlier today. Listen to this glimmer of hope. Listen to this. Listen to this.
What's going on in futures, because we just noticed that they took a big leg higher. Vladimir Putin making some comments. Look at that now. Dow is up 450 points. S&P higher by 63, and the NASDAQ is looking to gain 218 at the open. Putin just said there are, quote, certain positive shifts in the talks with Ukraine. We'll bring you more as we have them, but that was enough to turn the futures around. Any sniff of progress in this war.
And Putin says that, so we believe it? I don't know what to think.
What we were looking for, listening to Lavrov talk yesterday and what was coming out of his mouth, I don't know if you believe anything.
I don't know if I believe anything. I don't know who to believe anymore, that's for sure. I do know that the one person or the one thing that I do need to believe is the markets. And right now, if I look at the markets, Bitcoin's doing, well, nothing. The US tech stocks up 1%, barely up. The Dow gave up all the profit, all the gains that it made, and is now trading at 0.5% up. And I think the question on all of our minds is, how long is this going to last? And are we going to go into another long bear cycle? I mean, yesterday we saw the inflation numbers up at 7.9%. And for the first time in a long time, we heard the word recession. We heard the word recession uttered by Janet Yellen. And today, everyone on Twitter is talking about a recession. So are we about to go into recession? And if we are about to go into recession, what does that mean? What does it mean for our portfolios? What does it mean in terms of how long we need to sustain ourselves for? That is what we're going to be talking about today. And we're going to be talking about the best crypto strategies for the remainder of 2022. I think it's going to be a huge show because today's Friday. And on Fridays, we banter. And today we've got a banter like you guys have never seen before. The biggest guests I think that we've ever had on banter. So let's do this. Let's do this. Let's do this. Welcome back, guys. I'm Crypto Man Run, and I am here 3, 4, 5 times a day bringing you crypto love and crypto wisdom. And together with you guys, building the best community in the world, a community that can be resilient through the good times and the bear markets. Today, we've got a massive show for you guys. Even though there's not much happening on the markets today, I think we have to answer all those questions. We have to answer the question of, what are we doing for the rest of 2022? How long is this thing going to last? I don't know. It sounds like it could be here for a while. Let's find out what some of our guests think. Raoul, how long is this going to last?
I have no idea. I'm looking.
How are we supposed to think?
Yeah, we know the game. It's a long-term game. I was looking at the charts of Bitcoin, and it either kind of bases around these levels, or that wedge that you're looking at breaks lower, and before you know it, we go back to the 250-week exponential moving average, which is 22,500. I don't know.
Wow. So you're thinking that 22,500 could be in play?
It could be, as you and I were talking about off camera. If this is 2018 again, that's pretty much what it would do. It'd have another sharp spike lower to hit that 250-week moving average. I don't really know. I thought that it should be basing. What's really interesting, you've thrown 8% inflation, you've thrown war, you've thrown 6.5 or 7 rate hikes priced in. You've thrown everything at it, and the market's not made new lows. That's a positive, but maybe that's just a false hope. Who the hell knows?
Who the hell knows? Well, listen, maybe Tash knows. Tash, what are you thinking? Are we going to be here for a while, or is this transitory as the key word?
Well, look, if you're going to start a war, you're not going to change your mind tomorrow, okay? So you've already mobilized all the troops and logistics, and that's a lot of work, right? You're not going to revert immediately. So I think we see a lot of drama every day, like you said at the beginning. Whenever there's good news, the market up, or, the market is playing along with this, game of propaganda, right? So, but I think whatever you think this is going to last, maybe times 2.
Wow. Okay. So Mark Yusko actually said yesterday, he said, a bear market is a market where the market keeps going down, and every now and then on good news has a little spike of hope and then goes back down again. I don't know. When I look at what's been happening the last couple of days, That's kind of like how I feel. Like we get the Biden order and the market goes back up, and then let me just get the chart up here. So you get the Biden order, you get a big green candle, and then the next day it's a big red candle, and we're back to exactly where we started.
I think that the green candle is probably related to the dollar, but we can talk about that. But these things are very hard to trade because you don't know what kind of good news is gonna come out, or maybe it's extremely bad news and then market sell off. Right now, it's probably not selling off enough.
You don't think it's selling off enough?
What's that?
You think it's not selling off enough?
I don't think there's enough fear in the market yet. Considering that the situation with the liquidity situation, the financial conditions situation, the inflation situation, and the recession situation. So I don't think the market is all factoring that in.
I tell you, Ram, what would be interesting is asking the audience, because one of my hypotheses is retail investors, everyone's got negative real wage growth. So everyone's getting squeezed right now. So I wonder if the audience is getting squeezed on their income and they've got less money to invest in crypto or not. Because my hypothesis is that people are putting less in now than they did last year or the year before.
The problem is that our audience are a bunch of degens, and I can't see that many of them still have a day job. I mean, I think our audience have been sustaining themselves from crypto. and that means that their income is now...
Yeah, so therefore, are they putting more money in or not? My guess is not. And if it's a network, the network doesn't grow if people aren't putting money in.
Kanav, should we brace ourselves for this and hold on tight because it's going to be here for a while, or are we happy to say that this is going to pass quite soon?
Hey guys, good to be here. Sorry I'm late.
Not at all.
Issues getting on here. Tascha and Raoul probably have far more informed macro opinions than I will. I jump. We're trading on a minute to 2 minute horizons, and so
wow.
the prediction. We're waiting for Raoul and Tascha to tell us the macro environment, and then incorporating that into our view of the world. Go ahead.
This question for you: are you seeing? You see a lot of flow. Do you see what's happening to flows right now? Are you seeing interesting flows, or is it very kind of choppy and no real net new flows coming in?
I think it's not much more interesting than it was, say, a month or two ago. I think it's been about the same. We're seeing a lot of sideways movements in the markets, like we've all been discussing over the last couple of weeks, and so. It's slow grinds up, slow grinds down.
What's liquidity like?
Liquidity is okay. When vol goes up, obviously, the inside of the book dries up a little bit, but overall, it isn't much harder to execute on either side of the market. I think people are still holding opinions, and so retail volumes are definitely down. That's my
wow. Okay, that's big news, guys. If you are new to the channel, subscribe to the channel, like this content. Let's get this out. Let's let the algorithm know that we're here and we're live, and also let's let the algorithm know that I know we promised you 3 guests, but we actually have a 4th guest for you. We've got Jordi, and Jordi is a self-acclaimed. I don't know if he's self-acclaimed, but a macro economist, guy. So I know that Kanav said he's not in the macro side of things. Jordi, I think you are in the macro side of things, right? You like to have that macro view.
Yeah, I mean, I actually make bets, right? Like I make huge multi-million-dollar bets all the time for years. And that's the difference between like not caring about macro and actually suffering through like huge, 7-8 figure drawdowns that are like stinging your heart. And then you get the lessons. So you're forced to learn, right? So I've been doing that for a long time. And I've been full-time crypto for a couple of years as well. So I'm happy to talk about the intersection. Like, you're asking, is this going to last? I think really depends on which asset specifically you mean. Like you're talking about Bitcoin. I've been predicting for a while that Bitcoin is going to have sort of 6 months of sideways, and then it's going to pick up in a new narrative. And I think it's eerily looking like that's going to play out. Like H1 is going to be very sideways, and H2 we're going to have a very strong narrative of this decentralized store of value in a stagflationary environment where there's not a lot of growth. We still have inflation, and people are kind of like looking how to protect themselves. And that's one narrative. The other one, we'll talk about later, is the war has kind of shown that there is a need for a kind of censor-proof or censor-ish proof. Let's be fair, it's not fully censor-proof, but a censor-proof money. So that's the other narrative. But if you're trading Luna, there's no bear market at all. You're not even feeling it. So it really depends what you're talking about specifically.
Okay, so let's break it up into two discussions. Let's break it up into the Bitcoin discussion, and then let's break it up, because Bitcoin to me is not a VC asset. Even though the market has been pricing it very much like a growth stock, to me, I can't see Bitcoin as a growth stock. But when I look at things like Luna, and I look at things like Ethereum and Solana, and I don't want to go much deeper than that level, because then we'll be here forever. But I think the market should be broken up into two sides. And right now, what we're seeing is the market very much track. We're seeing Bitcoin and the market therefore very much track the US 30. So the correlation between Bitcoin and the US 30 is uncanny. And when I look at that and I look at gold reaching all-time highs, I kind of think, has the market missed the point? So, I mean, Raoul, what do you think? Has the market missed the point? Is the market not seeing Bitcoin for what it really is? Or are we just a bunch of people that have brainwashed ourselves to believe that there is a new store of value and we're the only guys that actually believe it?
Well, the problem is Bitcoin, unlike gold, has two qualities. One is the store of value quality, and the other is the growth quality. What can the network be used for, the new technology, and those things are always interplaying. So this is why you see this kind of schizophrenic nature of Bitcoin and crypto overall, is it shifts narrative. So it's not correlated all the time. So we have passing correlations as opposed to total correlations. So over a longer time period, I wrote a tweet about this, over a longer time period, there is very little correlation over anything. Over short-term correlations, over short-term time periods, you've got correlations with all sorts of things.
So you're playing into Jordi's narrative here, which says we have been priced like a growth stock. It's going to move sideways for 6 months, but then the market's going to do a complete shift and say, okay, you're actually not a growth stock, but you're a non-censorable store of value asset, and then probably price it more like a wartime, non-censorable store of value asset.
I spent a long time looking at what is the predominant driver of price of crypto, and I came up with the fact that it's the amount of volume kind of multiplied by the number of wallets. And that is a good fit for pretty much everything, number of active wallets. So we need, for the price to increase, we either need daily volumes to increase or the number of active addresses to increase. Right now, we've got neither. So we got to think, okay, how will we drive that? We either do it from further retail participation, but in an inflationary environment where real wages are negative, it's difficult. So therefore, it would have to be institutional. Now, as I've said to you on the show before, I spent all day speaking to institutions, and pretty much everybody is they went last year to get approvals. They've now started getting approvals. They're now trying to figure out how the hell to do it. And so don't forget, 32 billion last year went into VC because they couldn't put it on their balance sheets, and it's easy to do VC. So that tells you there's pent-up demand from institutions, but the reality is they just don't want to own Bitcoin on their balance sheet. One of the things I've done on the side is built a fund of funds business that invests in crypto hedge funds, because you need institutional product right now. There's no institutional product. They're not going to use the ETFs because they're all futures based.
Okay, what about the Grayscale? Why aren't they buying the Grayscale product, which now has a 30% discount to net asset value, 27%?
Yeah, and some people will, but if you're an institution, it's very difficult to describe to your investment committee why you own something that says Bitcoin on it and it's diverged in price. These kind of futures-based products tend to be retail only. All these triple levered, all of these other things that we see in commodity markets as well, they're the same.
Tash, how do you see the next couple of months playing out? You've got the interest rates at yesterday, 7.9%. You've got the Fed now having to increase or to increase interest rates, I guess, or to start a tightening policy. I saw this tweet yesterday by Charlie Bilello, and he said that the market is now pricing in greater than 60% probability of 8 rate hikes this year, which would bring the Fed fund rate up to 2%. I guess that Bitcoin, at the size that it is, global liquidity does matter, and I guess that this actually takes global liquidity out of the market. And at the same time, we've got a war going on, which is pushing commodities prices right through the roof. And I guess that the next inflation numbers are going to make these inflation numbers look comfortable.
You know, all what you have said has been going on for a while. So if you look at it, now for better or worse, all the financial markets are extremely driven by central bank actions these days. So if you look at the Fed's asset purchases, that has been slowing down since last May, since mid-year last year. And correspondingly, you've seen, momentum slowing down in the crypto market. You've seen the market cap of stable coins growth slowing down since mid-year last year too, as well. So all these things are correlated. And so that gives you a sense of what's the momentum of new money coming into crypto. So that has been slowed down since mid-year last year. And also, if you look at, wallet distributions, large addresses in Bitcoin and to some extent Ethereum has been unloading since mid last year, since beginning to mid last year. So we've seen like a number of addresses picking up in Bitcoin, but that's mostly smaller accounts. But larger addresses,
only smaller accounts.
It's mostly smaller accounts. A larger account, with 1,000 above Bitcoins have been reducing. So where does that money go? That goes into the rotation game. Last year, the whole year, we've been seeing the rotation within the crypto in full swing, right? You have the alternative layer ones and so on. So that's the money flow in crypto is from TradFi flowing into Bitcoin and Ethereum, and then from Bitcoin and Ethereum flowing into other tokens. But all of that, the fundamental engine is money needs to come from outside the crypto system. And that money flow has been, slowing down significantly since middle last year, with the tapering, not the tapering off, but the slowing down of Fed asset purchases. Now going forward, obviously, Fed is going to raise rates, and they said they're going to start tapering latest by July. It's still a question mark of how they're going to do that. What's the speed given the war situation? But I just don't see a situation where you will see increasing external funding into the crypto market. With the institutions, yes, institutions have coming in, but are you seeing it in wallet, in large wallet going up? No, you don't.
So I've got two questions here. What can the Fed do given where we're at? I mean, given the fact that we're probably going to see crazy inflation because of the commodity price surge. I mean, this commodity price surge is going to feed into the market probably in a couple of months. It's not going to feed in next week or next month. I even saw some comments yesterday on Twitter. People said the reason why these inflation numbers are so high is because of the war in Russia, in Ukraine. And I guess, these inflation numbers got nothing to do with the war because this was before the war. But it's inevitable that in the next 3 months, we're going to get inflation much higher than 7.9%, much, much, much higher. Where does that leave the Fed? Because the Fed can't really you can't go to the average American and say, look, it's costing you so much more to fill up your car. It's costing you so much more to eat. And by the way, now we're raising interest rates, so your mortgage is going to go up, and also your car repayment's going to go up. So what does the Fed do here?
So this is a dangerous situation, right? Because you don't want to get into a stagflation situation. That inflation is going to cause perpetuate a recession itself. So the thing is you have to nip the inflation in the bud. We are already so late, right? So, but if you let the inflation situation go on, it's going to cause a bigger recession down the road. So I think they will have to be pretty adamant about the tightening for one thing, and then there will probably need to be some type of price control.
Jordi, what do you think? What is the Fed doing?
I think the Fed has already messed up. The people like Mohamed El-Arian and everybody was calling for them to tighten last year. It was completely right. They've missed the boat. It's too late. Now the inflation is no longer monetary. It's not demand driven anymore like it was last year. The first, like you said very correctly, the 8% inflation is all demand driven. But now there's going to be supply driven inflation. There's been a little bit of that, obviously, to be fair. But now we're kind of getting into territory where tightening is not going to matter. Like you can you can reduce demand. You can like really hurt, you know, the wealth effect. You can do different things to like reduce leverage, but it doesn't matter at this point. The inflation is supply driven. The Fed can't do anything. You know, Germany can start turning on their nuclear plants again. That's one thing we can start doing. We need to kind of get the cost of energy down. But I mean, I disagree with Tascha on a few things. Like I think, you know, Bitcoin can act like a commodity. It can go up in value. Like we've seen nickel, gold, you know, you name it, wheat, everything limit up for a few days. Like Bitcoin can act like a commodity. I agree, like in general, the VC game that we saw last year, like all the money, like Raoul said, was much more interested in like finding the high beta stuff. That's probably going to slow down. We have a lot of funds raised, you know, billions of dollars, and they still need to allocate it. And I invest a lot on the primary side. And I'm telling you, man, like the deals, you know, 50 million, you know, just a pitch deck and like no product and just getting filled up with like a, you know, a hope in a song. Like that's just not sustainable. So I actually think, you know, comparatively, even though last year we had Bitcoin underperform, I think it will pick up later in the year. And the VCs that have to allocate, you know, better choose carefully because there's going to be a lot of junk over the next year.
Wow. Okay. So, I mean, for one, what I'm getting here is you're saying this is a fundamental change in strategy. Like you're talking about a long period of time. You're talking about, you said the word year. It's reminding me very much of, maybe I've got PTSD, but I was here in 2015 and I was here in 2017, 2018, 2019. Are you saying brace yourselves for a washout of the ecosystem where all the VCs that were making 100x's and 2000x's and 50x's are now going to get wiped out? That business model is gone. They're going to have to come and reinvent themselves at the end of another cycle.
I'm not saying they're going to get wiped out. I'm saying, you know, real growth, real returns, like even for equities. I don't see any real returns for equities for a long time. You might see nominal return if the Fed pivots, you know, they do a couple rate rises, they decide we don't want actually to go into a recession. We're just going to let this thing run. We're just going to devalue the dollar. You might have like, you know, the next leg up on equities. That's for sure. But it's not going to be, it's going to be amidst inflation. So it's not going to be real returns. We might have like S&P go up 10% and we might have like inflation be at 10%. But, you know, VCs that have, you know, had these like like it takes Solana, you know, how many family offices and funds feasted on 100x returns there. And I'm not sure we're going to see too many of those. There's going to be a few. And if you pick carefully and you really kind of get the narrative right, then you can still get them. But it's not going to be a single coin.
Okay, Raoul, you're hearing this. I think you're in a healthy mix of macro and VC. How would you position yourself now?
Well, one of the things that I think people haven't talked about is this rise in prices is a massive tightening of monetary conditions. From my expectation, I think we've already hit 200 basis points, and that's why the yield curve is essentially zero. So the ability of the Federal Reserve to raise rates without a recession is pretty close to zero. So therefore, if a recession or something close to it is already being priced in by the yield curve, then demand should come down anyway. So I'm actually less of an inflationist over time. I think more of the inflation argument, or more of the inflation was driven by the supply as the world came back online again and there was restricted supply. So I don't think the Federal Reserve could have done a lot differently. I think you would have taken some of the inflation out for sure. So for me, it's looking at the macro environment. The macro environment is not easy to trade either. You kind of, you know, being short in this environment in equities, how much further downside? Well, you know, if you go back to every tightening phase from the Federal Reserve, the market tends to sell off about between 15 and 28%. And we've kind of in that zone. So should it go any further? If we're in a full recession, then it's different. But we also have the reaction function from central banks when we get into recession, is they're going to use the balance sheet. Now, we might see direct transfer payments, i.e., you know, tax rebates or whatever version to offset the energy costs and the inflation costs. Well, that's actually a net printing of money. And I think that's a positive for the market that's likely to come. So the macro markets are actually quite difficult to trade right now. You know, the dollar feels like it's going higher, but I think it's not going to be in a straight line. Bond yields, I think, will probably top out somewhere between here and 225 in the 10-year bonds. But we're kind of still a bit in no man's land. We sold off, didn't really stick in terms of yields. You it's not an easy place. But I'm trying to sit patiently. I'm long a bit of bonds, long a bit of gold, and long crypto, and long some dollars, and just kind of waiting to see. I don't think it's the time to take aggressive bets yet.
Yeah, guys, I do see we're having some sound quality issues. We hear each other fine in the studio, but it seems like the stream to YouTube is breaking up. I have tried to log off and log on. If it's still happening, let us know in the comments. I'm going to try and reduce the I can't even reduce the quality because we are on the stream. All right, let's try our best. I did log off and log on. I think it's a YouTube streaming software thing. Tash, how would you be positioning yourself now?
I think I agree with Raoul. This is a very volatile and choppy market, and it's very difficult to have any thematic driven trade. So I would say if you are if you know how to trade tactically, by reading charts and short-term momentums and doing like a swing trading, do a smaller position to take advantage of the volatility, because volatility is going to be huge, but just like with good risk control. And because the market may, like Jordi said, I agree, may go sideways and may go down even more. You never know. Like we have a tight start to have a tight liquidity condition. It can, trigger a, downward spiral. So I would say if you have some skill to do that, then you do that. Otherwise, if you are waiting to allocate, maybe this is not the best time. Wait for a time that prices will drop more. If you're hodling, well, then you hodl. If you've got no time for the market and you don't know what to do, and but that over the next 10 years, we're going to see a decade of Web3. This year is probably not a year of Web3, but this decade, I think, is the decade of Web3. So if you have the conviction to hodl, then hodl. If you have some skill to trade, then trade with small position with good risk control. If you're waiting to invest, then keep waiting. I think you will have better opportunities than this.
So, Tash doesn't mince her words. Tash goes straight for the jugular and says, this market's going low. So she's saying, don't deploy money now. This market's going low. Jordi, if you were a investor, you've got a little bit of money on the side. You're pretty invested in crypto. You've got a little bit of money on the side. You've pretty invested in the S&P and in the Dow because you took some positions just after COVID. Hold on or start to deploy?
Yeah, I wouldn't have any money in equities right now. It all depends what your time horizon is. Raoul is completely right. If you have like a midterm time horizon, I think Tasha made a lot of good points. That's how I see it. Like if you can swing trade, this is an incredible environment. Like for somebody like me, this is like paradise. You can sell the rips on equities. You can sell the rips on bonds. You can kind of expect things will. There's like a nice, beautiful pattern. Macro traders understand that equities and fixed income have this like positive, negative correlation switch depending on the conditions. And right now we're mostly in a situation where they're going to move off each other. Like as soon as bonds sell off, you have a problem with NASDAQ because rates are high and NASDAQ's going to suffer. As soon as like NASDAQ starts to recover, bonds go down again. They're kind of like in a feedback loop. So if you can kind of trade the two back and forth, it's a beautiful spot. If you're just retail, you want to keep it simple. Completely agree with what Tash said. Put some bids around like 35K Bitcoin, and once you get filled, you can sell at 45 and just wait. You can do that a few times before I think we see the next explosion higher. If you want to invest, just pick some coins with long term. I don't know about Web3. It's very hard to predict. Even if you believe in Web3, you can't predict which companies in Web3 are going to do well, even if the narrative is going to do well. And I find that very hard to do. Like just choosing, it's going to be Decentraland or it's going to be, Sand or XYZ coin.
All right, we'll talk about that in a second. But I look at the NASDAQ chart. So this is the NASDAQ chart. I think we're all very familiar with it. When I look at traditionally corrections in the NASDAQ chart, big corrections are 30% corrections. And if we look at the correction that we had over COVID, and you go from the pre-COVID high to the bottom of the COVID low, you're talking about a 30% correction. If I go to this section over here, you're talking about we're down 20%, 21%, depending on which day you look at the market. This is a significant correction. what's everybody waiting for?
Clarity.
But when you have clarity, won't the market also have clarity? And I think the reason why I say this is
yes, but the issue is, Ran, is 2020 is not a good example because it was a 2-month recession and it was met by the largest stimulus the world has ever seen. So you need to go back and look at 2008 and 2001-2 and look at how long a bear market lasts if there's a recession and how deep it was. In those cases, they're generally 50% downside and they tend to be 18 months long.
Okay, so you're
so we don't know where we really are in this situation. Don't forget the reaction function of central banks has changed now. So they tend to be faster on the trigger, but this one's different because we've got high inflation. So there's a lot of unknowns for all of us in this. We don't know their reaction function well enough yet.
But all the other times that you've mentioned are times where there have been catastrophic breakdowns in the system. So you're talking about 2008 catastrophic breakdown in the system.
That's what recessions lead to. That's not what causes the recession.
Okay.
Right? So what happens when growth contracts and the price of collateral falls or leverage contracts, it exposes the weakest hands. So that's why we saw those situations. If we had a full recession now, what would be the thing that blew up? Probably nothing. And the reason being is the central banks don't want the collateral to go bust because leverage is too high. So we saw them already in 2020 buying credit. That was them saying we can't allow that to go bust, even though a healthy cycle is weak borrowers should go bust, but they can't allow it. It's too much leverage. So it's a really different world.
Okay. When I look at the word recession, so, I mean, if we define the word recession, it's periods of temporary negative growth or lack of growth, so to speak. If I look at the reason for this recession, the reason for this recession in my mind is because the Fed drowned us with money, the economy grew, and whether the real economy grew as quickly as we think it grew or not is up for debate. But the economy grew because they artificially injected money into the economy. And the economy grew too quickly. And then we'll come down a little bit, and then we'll just continue to grow because there's more and more money going into the system. I don't think they're going to tighten to the point where they strangle the economy, and I don't think they can now because of the war. Tash, what do you think?
I think the priority is they need to get the inflation thing under control. Otherwise, it causes bigger recession later. So you may have a trade-off of a small recession now and a bigger recession down the road. So if you don't control the inflation, you're going to have a much thornier situation. So I think they should really try to clamp down the inflation, which means be somewhat steadfast in terms of the tightening schedule. Whether they will actually do the QT, I don't know. But the rate increase, I think that's justified, and they should have done that long ago. So,
how many rate increases are you expecting this year? I mean, I know, what are you forecasting? We had, as I said, to the Charlie Billetto tweet where he said that Fed's going to go 8 rate hikes this year, which will take us up to 2 or 2.25%. Jordi, you're nodding. You're saying that no.
Yeah, I mean, look, I've been trading fixed income a long time. First thing is, the rate rises, they're like pricing in bonds. It's like the other way around. It's not like these predictions of how many prices are priced in. It's because somebody's hit CF, somebody's hit ZN, and then the 2-year bond has to adjust, and then they'll adjust the Fed funds rates because everything is kind of arbitraged between them. There's like this arbitrage game. So if somebody's selling a lot of 30-year bonds, 10-year bonds, you will start to see it filter down to the Fed funds rate, and you will see it filter down to the Eurodollar. So we've had kind of like a big correction in bonds, and I think that's causing some of these like rate rises. If you ask economists and actual people who are looking at it, we're not going to have 8 rises this year. We'll have 5, maybe 6. That's always kind of been on the cards. I don't think we're necessarily going to have a 50 thrown in there. Especially, I agree with what Raoul said. Like, there's already been tightening. The prices going up so much destroy demand. The Fed doesn't need to destroy demand. It's already being destroyed. There's a difference between, oil going from 60 to 80 and going from like 60 to 120. Like, people will actually change their consumption pattern at this price level. So I don't think we're going to get 8. It's just a reaction to bonds selling off.
Now, there's a massive incentive. If I hear what everyone's saying here, is there a massive incentive for the West and specifically for the US to end this war as quickly as possible? Or is there the opposite incentive? Now, the one incentive is end the war as quickly as possible. The other one is don't end the war and then you've got a scapegoat for all the inflation. Then it's not actually your fault. We're already seeing the narrative changing to this inflation is actually caused by Putin. This inflation is caused by Putin's attack on Ukraine. Where do you think the US sits in all of this?
It's a bigger game than that. This is geopolitics. It's a much bigger game, and this has been played out over decades. So, you need to figure out in game theory who's trying to get the advantage over whom. I don't think much of what's happened will have been a shock to anybody involved. In terms of, the Russians kind of would have expected this, and everybody's trying to push it for their advantage. Maybe the advantage is to weaken Europe as a whole or NATO as a whole. Maybe the US has an advantage now that it can become the predominant energy player by pushing Russia out of the market. These games are ugly in geopolitics. If you ever read the book, The Confessions of an Economic Hitman, I got about 2/3 of the way through it and I put it down. I thought, I don't want to know this stuff. It's so ugly that it's just not nice. And you'd rather not be involved. And the other thing is none of us know. So it's just conjecture. We can sit here all day and pretend we know, but we don't.
Jordi,
So
what
I
do you think?
really avoid geopolitics as much as possible.
Like the West, it's not up to the West. Like the people that have to decide to end this is going to be like Putin, on his side. Like how much pain is he really wanting to take? And he needs to save face. So I think it's going to get brutal until because they're negotiating right now. And when you negotiate at the table, you want to have a strong position. So it's in Putin's interest just to cause as much damage as he can to force the other side to meet his terms. On the Ukrainian side, they're going to hold off as much as they can. The West is not the one who's going to decide when this ends. It's just going to be I think everybody wants it to end, but they want to win and they want to have the right terms. So, in terms of inflation specifically, what you mentioned before, energy has been underinvested in because we had so much demand destruction during COVID that, a lot of things shut down and it's going to take a while to start them up. So in that sense, the war has hurt. I don't know what Russia is going to do. Like they are kind of cutting themselves off from, the energy markets. It's going to really be an issue for them and it's going to be an issue for everybody else. But
listen to this. Listen to this.
A fund of funds that touches so many different investments around the world right now. You're looking at this and you're thinking what?
Yeah, I think it's good news for the West. I mean, I agree with everything Stephen is saying, but I'm going to just add a few things. There's no way back into the international community for President Putin.
Do you think this is done?
He's a war criminal. I'm sorry?
He's done.
He's done. He's a war criminal. He's someone that perpetrated murder, everywhere. And one of the problems now with social media, Andrew, it's just ridiculously bad. And so he will likely negotiate a ceasefire and try to figure out a way to get some type of immunity for himself and some of his generals. And so when you stop and you think about that, that is also possibly good for the West. But then again, we don't know who's going to replace Vladimir Putin inside the Russian power structure. So to me, I look at the West today, Joe Biden, the coalition, the 28 nations. They locked him down in the most aggressive way after, as Joe Kernan just mentioned, 15 years of not locking him down, whether it was Georgia, Crimea, Chechnya, Syria. He figured, hey, this is no problem. I'll just be able to go in there and I won't face that resistance. And remember, one thing that Stephen left out is the active measures here in the United States. And so the former KGB officials, the GRU, they're trying to split the country. They've got a map of our country somewhere in Moscow, and they'll send, racial invective in certain areas of the country. They'll send anti-vaccine propaganda in other areas. And he really thought he had the country split. And he thought he had a few of these Republicans like Trump that were going to go out there and praise him. And he thought he had the West split, and he doesn't. And he is finished. He will go like Khrushchev goes, and I predict that he'll leave before Joe Biden ever leaves office.
All right, so that's Scaramucci, obviously with the Scaramucci view of things. But do you think that Putin did underestimate this thing, or do you think that this was very calculated on Putin's behalf?
I mean, he screwed up, right? He definitely like overestimated himself. He'd probably been surrounded by yes men, and he just thought it was going to fall easy. It was going to be another victory. He definitely miscalculated. But I disagree. I don't think he's going anywhere. He's gonna just kind of get some sort of victory that he can point to. He's gonna force Ukraine to give him some territory, and he'll make it past Biden. I disagree.
Tash, what do you think?
I think these commentaries are all very West oriented, right? So it's a West point of view. If you sit in Russia, you look at things very differently. The approval rate of Putin in Russia is pretty high, and with war is probably going higher depending on what kind of, media sentiment they're putting out. So I don't think that'll happen. And I'm not a conspiracy theorist, and I don't like to sit around and waste my time guessing other these Putin's intentions. But it's I think it's just for us it's going to be a situation that's gonna last a while, and it's not going to be pretty.
Okay, so now let's address the elephant in the room. We've got a whole community and the whole crypto community that is now invested in the market. A lot of them are not overcommitted, but highly committed. A lot of them are in Bitcoin and Ethereum and the top couple of protocols, but a lot of them are spread out across the top protocols, some protocols lower down, Luna, Solana, Avalanche, etc. And then some protocols and tokens even lower down, bull market tokens. What non-financial advice do you give to people in that situation? How would you be playing this? Rather, I know that you started off in Bitcoin, you then went Bitcoin, Ethereum, you then had the Real Vision bot, and if I remember correctly, the Real Vision bot called Cardano and Luna and whatever else. And I think you said
that's just a community source, right? That's nobody but everybody on Twitter and everybody in the Real Vision community. So that's not my allocations.
Okay, so I mean, if you don't mind us asking, what are your allocations? Are you how's it changed?
Mine haven't changed at all. I haven't taken a penny out. The riskier end of the curve, I had thematic strategies. So I had DeFi, I had some Metaverse, I had some layer two, some layer ones, but mainly, it's 80% ETH. The riskier end of the curve got killed. Some of the Metaverse stocks did pretty well in a bear market for a period of time. It's like, for me, that's fine. And therefore, if I think of the risky side of the market, I took a small amount of risk in that. I then topped up with ETH calls because that was I thought we had a decent probability chance of an upside break at the back end of last year. Didn't happen. So lost in the calls.
Expired worthless, yeah.
Expired worthless. Well, haven't expired yet. If ETH gets to about 15,000 by 2 weeks, I'll be in the money. And that's fine for me. So really what I've been doing is looking to allocate more over time slowly, because this is not a market I try and time, because I'm not really interested in that. I'm not a shorter term guy. So I'm looking where to allocate and how to allocate. I'm still struggling to find a better bet than ETH as a risk-adjusted reward over, give it a 12-month time horizon. Yes, others will do better, but you got the changes to ETH coming. That's all coming by the summer. I think also we're going to get the Bitcoin ETF, the spot one out. From what I'm hearing through back channels, that there's at least 2, maybe 3 that are going to get approved, and that's April. So now that doesn't mean that people rush into that because Bitcoin's going down. So why would they? But at the margin, these are positive news flows.
So you thinking, or your back sources, I mean, let's not call them back sources, but you're thinking that there may be a Bitcoin ETF as soon as April, a physical Bitcoin ETF.
Yeah, April, May. But April there's at least 2 in April with Bitwise and another one. We're getting very close. And, Gensler's statement this week or last week, whenever it was, I've lost track, was very positive for this kind of stuff, which is, we get it, it's here, it's not going away. We'll regulate it carefully. It's just all the right steps.
I mean, if we get a Bitcoin ETF in April, that could be the catalyst that Jordi was talking about.
But why, Ran? If you launch a product in a down market, why is that suddenly going to be, oh my God, let's rush in, right? Humans are, behavioral creatures, and so it just facilitates a bull market, but I doubt it turns around a bear market because it makes no difference because retail already own the stuff, and institutions, they tend to prefer, we might get more allocation, a bit more allocation, but they tend to prefer to see the price turn around.
Jordi, what do you think? Are we getting an ETF as soon as April?
The ETF news, I don't follow as much as Raoul does. I think it would be obviously a big catalyst, but that's not the catalyst I'm expecting. And the way that I'm expecting Bitcoin to turn up is not because people are going to get greedy and like try to dive in. I think there's going to be an adoption cycle that's going to start being very strong, and that will kind of get a lot of momentum itself. I don't think it's going to be driven because people have a lot of money around and they're just kind of, want to allocate it to Bitcoin. People will start seeing the Bitcoin chart run away from them, and they'll be forced to get back on the train. That's my thesis for later in the year. In terms of, you mentioned like smaller coins, they've had a huge correction already. Everything's down 80, 90% unless you chose very carefully. That's not coming back because a lot of that is driven by the wealth effect because of Ethereum and Bitcoin. Like those two coins doing well is kind of, allows people to start buying NFTs and kind of going down the risk curve. So here's like the pure, like easy alpha. We're in a very inefficient market, crypto. You shouldn't buy these small coins until the big ones do well, and then it'll spread around and you'll have plenty of time to pick and choose then. So right now I would keep it to like the majors. If you really believe in a layer one, you have to pick carefully. You need to understand technically. We've seen Solana break down many times. It's still good tech, but they're having issues. You need to understand kind of like the pros and cons because we're going to get into a situation where the best technology is going to win. I think, I spent a lot of time on DeFi. Every chain is going to have its ecosystem. They're all going to have people build on top of them and create DEXs and create money lending markets and everything else. And the best technology is going to end up winning in like a year or two. So you want to choose carefully.
Wow. Tash, what do you think?
I think if the best technology is going to win, then why is Bitcoin is still around? I don't think the best technology is going to win. I think whatever gets traction is going to win. And there are different ways to get traction. But anyway, I go back to what you said. I think
just to clarify, I consider like Bitcoin to be like, there's Bitcoin and there's like everything, all the layer ones. It's just I don't put it in the same category.
Yeah, I agree. So so like you said, a lot of people bought, I myself included, bought bull market tokens, right? So those only go up in bull market, smaller cap, high growth but high risk. Right now, I'm 70% in cash, so wow. I'm looking to allocate. I do some swing trade with a smaller bet to take advantage of the volatility situation, but that's not going to make me rich, So and I do some commodities allocation right now, and in the crypto. My portfolio hasn't changed. It was the same as before. It's just downsized. I have some majors. I have some, smaller degen tokens. And if people are looking to more on the investment side, I would say you probably look to look for good infrastructure projects.
If you were allocating now, so let's say that you were allocating now, you said you are allocating now, you said you're 70% in cash. What's on your watch list? What are you looking at to allocate to?
Mostly in infrastructure projects. And by infrastructure, I mean things like layer 1, layer 2, and layer zeros, and also, data availability layers probably come out later this year. And then there are, cross-chain bridging projects. Anything that will help the ecosystem scale better and improve the user experience and improve the connectivity across.
What about Metaverse? I mean, when you say layer 1, do you mean also layer 1 Metaverse projects? Sandbox, Decentraland, maybe going.
Those I will classify as bull market tokens. And anything metaverse, social token, game, those are basically application layers. Those kind of thing. We are like last year we saw huge growth, but mostly speculative, right? It's a less of a real use case. So I think at this stage, it's the safer bet is the infrastructure place.
Also,
Wow.
the other one that interests me is look, DeFi's not going away. Most of DeFi's down 75% or so. I don't know whether what's in existence now in DeFi has a killer application, but my guess is if you're looking to allocate out further out the risk curve, a DeFi basket at some point down this much gets kind of interesting to me because DeFi's not going away, and it's going to be a much larger part of the world as we know it in the future. I personally can't choose what's going to win out of this, so I tend to do these things as just buying an equally weighted basket of stuff and see what happens.
Jordi, are you a DeFi man?
Yeah, I am.
Which projects or which verticals in particular would you be looking at?
So I invest primary. I do see deals. I talk with founders a lot. So I can't say that retail can have the same token entry that I have. So I don't want to say like buy this token because I got it maybe at 30 cents and now it's $3. It doesn't mean it's the right risk return for everybody. The thing with DeFi is it's very easy to copy paste. It's very easy to clone stuff. So what I do personally is just really spend a lot of time looking at what the founders' background is, like how strong they are, listening to their interviews, listening to their ideas, reading what they're writing. You want to pick the right people because it's so easy. You've seen how many Uniswap clones, right? Like DEXs are just like so easy to spin up, especially on EVM chains. So you really have to kind of choose which is going to be the right team to execute the next innovations. So I look for innovation. We've seen the basic stuff. There's some basic borrow lend. There's some basic.
What was the last innovation that you saw? When you say you look for innovations, I want to try and get into your mind and try and understand what. And again, let's not talk about whether it's well valued now, not well valued, because as you disclosed, you may have got some earlier entries which are not open to everyone. But I'm trying to understand when you say innovation. I know that the forks of Uniswap are not innovation. What do you deem as good innovation now in DeFi?
Yeah, so I mean, we're having innovation on the algorithmic stablecoin side. That's kind of what I find fascinating. I mean, stablecoins sound boring because they're flat, but then you have the governance token, like Luna, for example, is capturing the value of UST, and that's doing incredibly well. There's other examples as well, something like Rari, they come up with kind of this idea where you can create your own pools that are, very much specified in terms of what assets go in and how you treat them. And then you can issue stable coins against assets and liquefy assets. There's a lot of nuance in terms of like how you do these stable coins. Like you can take a basket of NFTs and issue a stable coin against it. And then the tricky part is like liquidations. If the price of the NFT goes down and you want to still be backed, you have to liquidate something. How do you do liquidations? And I think a lot of the innovation now is going to come around, really solving these edge cases around like, well, what if the market goes down a lot? Your backing goes down and your stable coin isn't backed now. What do you do? There's a lot of smart people working on these ideas, and that's where the innovation is going to come, because whoever like really cracks everything and creates like
have you seen a project called JPEG, which is doing exactly that?
Yeah, I've seen it. I've seen quite a few that are trying to liquefy NFTs specifically. There's been a lot, either fractionalizing them or creating pools where people can just drop in their NFT and it's like a floor value. They're kind of okay. Like, it's an okay start. I think the end point is going to be quite more sophisticated. There's a lot better ideas on how to do these things. And we're going to see some innovation there. People want to hold stable coins. We've seen that very clearly. We've seen like the huge demand in UST because of Anchor kind of giving this 20% yield. And I think the future is going to hold a lot of innovation on the stablecoin side. Also, on the private side, obviously,
We've got a few minutes left. Tash, Raoul, the best innovation that you guys have seen or innovation that you're looking at, if you were to cite one or two projects where you think you're not saying to the public buy them, but you're saying that's real innovation. What tickled you guys in terms of innovation?
I'm such a macro guy. It's not my skill set to do what Jordi does. I just don't have the bandwidth for it. So I tend to look at, okay, where is the next big wave? I try and live a couple of years in the future in almost everything that I do. And for me, the big thing is the applications layer. It is DeFi and the next iteration of that becomes more usable for the average person, and it's unusable for the ordinary person. So that's going to come, and that's going to be huge. I think, as Tascha mentioned social tokens. They're coming. I know they are because I'm working on a bunch of projects based around this, and these things are enormous. But people just don't know it yet because they haven't seen it. So all of that's coming. The applications layer around NFTs has only just started. It's very frothy right now, pulls back. So I'm actually focused on that. As I said, I'm building two businesses. One is actually tokenizing the world's largest communities, particularly cultural communities, music, sports, and fashion. And the other business is a fund of funds to give access, which is what we need to do. We need to give institutions access because they haven't got it.
Awesome. Tash, in 1 minute, any innovations that you've recently seen that you said, wow, that's actually a real innovation?
To be honest, not very recently. In DeFi, all the things, the workhorse of DeFi came out of last bear market. And so the next stage of innovation that I want to see is to get off-chain assets on-chain.
Amazing.
But that's going to involve a lot more other issues, the legal issues, for example, compared to not just sitting in your basement and code. But what I would look for is still the infrastructure scaling, on the layer 1, layer 2 side.
All right, guys, thank you so much. Apologies for the sound in the beginning, but I think we did get it sorted out. Love you guys, madly. I think this has been a great show, and I guess not the best time of the market, but great to hear views. Thank you so much. And of course, your Twitter profiles will all be in the description links. Your Twitter profiles, links to Raoul's channels and everything else will all be there. So if you need to get hold of any of the guests, everything's there. Guys, thank you so much.
Thank you. Really good conversation. Loved it.
Thank you, guys. Thank you.
Bye-bye.
And guys, Tash and Jordi, welcome to the Banter fam.
Glad to be here.
Great. Wow. That was a lot of alpha. I think I have to go back and watch the show. Hustle, what did you think, bro?
I literally was just thinking in my head, when I get out of here, I'm about to hit the gym after this, and then I'm watching the show again. Even though I sat in the background the whole time, I got to reconsume that information for sure.
Buddy, what's happening in the gaming show later? Oh, there's an interview later, right?
Yep. We have an interview. So we've been covering Cyball, one of the hotter new play-to-earn games, and we've been really, participating in that economy. And we have both of their co-founders actually joining me on the show here in just a couple hours.
Unbelievable. Hustle, chat to you later, brother.
Awesome.
Banter fam, much love for you guys. It's been good to be back with you, and I'll see you guys again on Monday, hopefully with a green Monday. Hopefully it's going to be a green Monday. Until then, don't trade. Don't trade well. Go and have a good weekend with your families. I'll see you guys again on Monday.